Start.
Hi, will do, will do. Welcome to a FlashTrade webinar. This webinar intended only for entertainment or exchange of idea only. Okay, now let's see what I see here. This is a monthly chart of Euro USD. I know this is Euro intraday. I just want to see some point that I tried to mention. Someone that asked me certain thing. Yeah, 71, welcome. Okay, this monthly chart that I'm showing to you is as follows. It just try to show something that may intrigue you, or maybe you don't pay attention, or I think you are. You guys doing that. You guys are very good, keen to look at that. Remember, this is my bubble theorems. The last 6 months of the year. To find the pattern of the last 6 months of the year, and then up, down, up, and down for next year. And this year, we see that the starting point here and go all the way back up there. Now, pay attention to this one too. I'm going to show it you here. See, when you have this, you start it in here, go all the way up, and then you close in here. I know the trend is up, but it doesn't mean the idea of up is, higher high, higher low. So, but at the end, it's still considered as up, because of, the closing is actually still above the opening of August. Then this one also go all the way up there, and then basically it closes right here. Okay, so although the trend is up, it does not mean that it will keep going up and things like that. Okay, and at some point there will be a correction. It's a 6 month. It's a November, December. There are 2 more months. Okay, this is how the month. Now, if you see the orange here, it's a 30%. Okay, this is a 30% from here, or 70% from the bottom, and this one is a 50% for this. So, and you pay attention also with the moving averages here. This is where they actually pass right now, meaning the average trend. The possibility of going up here and then go all the way to the moon. I remember that when people are in 1.6, it will go to $2. When they go to 120, if you say we'll go to $1, the Greece situation, and this one with the something that hyperbolic kind of situation happened at the time. Okay, so I just want to give you this starting point again from that. Now we're going to go back to the beta from a fundamental way of to use the STC, simple trading concept, limit, and then we do have the trend and size. Yesterday we emphasized that the size to use. Hopefully you guys get that concept quite. Let me just want to give it to you guys one more time here. I create the chart to have an idea if you have an income or net worth, of $100,000 dollars. I suggest to trade with the $10,000, and then if you are in this average this, but my suggestion 10%. Basically, it's not saying that for me, I believe that it's my personal opinion. It's not that can be applied to everyone. My personal opinion is 50,000 is the minimum for you to really can trade to make money in this environment right now. Um, with that idea of 10,000, this is the leverages. Okay, so you got to have the idea. Some of you guys may not be able to get these leverages if you live in United States, and you got to use assumption name ups as just you can create sort of like a incorporated uh, company outside in Bahamas or some other place. Bahamas, go White West Indies, and someplace somewhere, and then you can actually get this kind of leverage it outside, and if you take one lot, which is that is a 5% of the amount here, it's more likely you cannot even trade 10 lots. Remember that I recommend the size of a 10 lot, and the production that generated from that is based on the fact of the 10 lot thing. Okay, and I'm going to show you. So this result that I produce prior to this every day that I'm going to trade also live. Like producing this kind of result, it's because and don't misunderstand the fact that the idea is based on the for my own way to show you my own strategy of a very simple one. Also applying the strategy of most of the time, most of them, not all of them. Okay, and that's another thing is doing something that breaking out. Okay, that's a breaking out to range, and the rest is as simply as making very small change. And this is using a 10 lots per trade. So that is something that you guys have to be aware that why the $50,000. Now, if you're not having that amount of money, okay, in a way, that is something that you need to consider to do the demo for a year and then try to make a stick around with your current job and then get you strong. It takes times. This is the I show you the how the result is at the time. And see you see that 200, 300, 250 loss, 500 win, 230 win. And this one is a 45 pip, 47, 51 is a breakout. Same thing as next trade. And they change direction after the news. They're going down, and you produce that 32 pip, 29 pip, 38 pip. Okay, so this is consistency. How do we produce consistency? Let's start it right now. Let's go with the chart, back into the charts again. this time you'll be seeing like yesterday. Beautiful, colorful charts. I don't know, it's getting more colorful every time I see this. Oh, let me show you one more thing about the daily that I usually do this. So with you guys. Okay, someone, it's the thing that I usually do the Thursday, I think. This is for Thursday thing. But today Tuesday, right? I confuse myself. And you see this is a daily chart. Okay, it's the same concept basically. It apply all exactly what you know. It can be applied in the monthly and it can be applied in daily, weekly, whatever it is you apply that. So the only difference is this. The only difference is I do not use monthly chart to make a decision or intraday. I do not use daily chart to make intraday decision. 8-4 chart to make intraday decision. As you may as well know, every time has its own limit with the price, its own limit. So that the limit is 122 pip intraday. So you need to focus. But this is I'm just going to show you how the daily is. Remember, daily is for what? For how many? Uh, Time. I mean, how long is the time from here to here? Daily is for monthly. So moving averages is for, this is moving averages is 23 to 24, whatever you like to put it in. And they are 575. And then this is when it stay above 575. And then the first 30%, which is the green here, is 30% of 575, but 170 something. So if you notice this one from here to here, look at it at the bottom here. This is the ground, this is last month, okay? It goes to, this is 168 somewhere going this. It's supposed to be 172, yeah, 172 about that. So if you draw 172 from here to the green, this is the green. Okay, from the bottom here, how about the 50%? Just divided by 2, right? 270 something. There you go. So if you really see that with the yellow green and you know why they stop and just suddenly you know where the direction. If you're trading for the holding for the whole month, you wait till the end of the month, which is today is basically the 29th. The Halloween starting at the 31st, right? At the end of the month of this month. It's going to be a scary day. Oh boy, I always get that kind of thought. Anyway, this is the idea. This is the point that I'm trying to get to you guys. This can be applied, but you cannot, in by any chance, is looking at the bigger pictures to trade in a shorter period of time. It's going to confuse the heck out of you. Okay, so just be consistent in a simple trading concept here. Euro USD M1. Oh, okay, someone put something up here. That's interesting. Just sometimes it's just okay. I can see it maybe why. Oh, look at that. Yeah, this is a 30. It came back again. Yesterday I bought it above here and it came all the way down, taking loss, shorting, and then, buying, and then came back that up again. That was amazing. This one is reached this because someone put this one in here first, not after the fact. So if you are yesterday, you know that all of this line exists there. Some of my trader actually put those kind of thing. When people say that moving averages or line or trend, it doesn't work. It's what you believe it. Work or not working. It's nothing to do, again, with the system itself. Remember that the concept of the belief system of all the provable statement are true statement, but not all true statement are provable. Okay, start to do an app. Let me clean up this thing first. You always put the 12 hours after the 0 GMT, right? Okay, Now there are changes that been happening of the time set when it started. So it has to be like 50 feet back like this. It's 6 p.m. on this one, so it become 11. They move the barrier. You guys have what the legal GMT to what do you call it? Solars. I got confused every time. Time change all the time like this. I don't understand that. Let me uh, do the trend line deletion. Why do I have so many trend line in here? What do I do again? No, started with this then. Let me take the deletion of this horizontal line. Okay, and then put this as a 12. And this is depending on where you at, okay? It's not depending upon the um, on each of this. Like this one, it used to be on the 11 because we're moving one before that. I mean the starting point. That is important part is the zero GMT, so you have to know where to put the plates. But since to make this concept easy, the fact is this is 12 hours. We started for this. I put 12. This is the 12 is 6 a.m. over here. It's standard time. Now, as you may as well know, the high of the today on Euro US 37.93, and you put that 37.93 here. Okay, this is the horizontal line before 37.93 and point 0.8 or whatever it is. If you don't want to confuse yourself, this is some of the ground or the last line. And then you put the 30%, which is a 36 pip. You know, mine is 36, and 37, 90, 36 is 57, I think. Am I right? 57. Oh, I forgot I have a calculator. Gosh. Okay, fine. 366. 3077 to, and then if you are familiar with the limitation of this is what you're going to find in the future that if you have not done this, you finally get it. Remember, I'm showing you this. It's a secret uh, of a limit. You know that. Let me show you again. The pit stop. I call it the pit stop. The 57 is 37.33. Thank you very much for that. They will have to stop sometime in the 30% first. First, okay. And let's see. Thank you, J Trader. Look at this one. 122.85 T36, and then it will have a custom for them. They call it a pit stop, and then they call it some pip swing. And that 57 is a common thing. They will drop there and then go back to 65. So if you do the contrarian trading, if they're coming from 50, they go up to 57 before it break out to the next level, 65, and they go back to 43, 44. So this the middle one is a pit stop, and then this is how they actually cracked it and breaking out up there. It doesn't mean that they break out totally. If you got squeezed because you do a contrarian, you got to know how to hold it that and then break out above this 7 pip. The thing is, you find out this is very useful. It's using mostly in our proprietary trading secret, level of Euro USD. You can find that in GPP, AUD, and the rest of it also. It is something that's so important if you're really doing a level 2 trading with the active traders. So you know to pack the price, you know how to defend and give them up. So you can see, whoop, sometime when you give them up and then you got have to clean up the bid or off in such a way that you got to reverse your position. So you will see the spike or the drop like crazy. and that sort of thing like that. You know the behavior. If it's a real movement of people get stopped out, couldn't handle the pricing, etc. Okay, this is a different way of trading. If you use a lot of lots, but that is you can utilize that. So if you you know you feel so that is the idea is this, and then if you feel you know like today I'm feeling against the market to short on the top, buy the bottom, catch the knife and feed the dog. That sort of thing like that, you know, and then you see the pricing and see like what is the prices that I can really deal with. That's something that pricing that you know that kind of a nice thing to do. Because a lot of you guys forget about trading is buy and sell, right? Buy and sell is with the price. And then you got the custom with the beautiful color, delusional chart. And then said, oh, break this thing. And then say, wow, this is the two closest below, two closest above. And then, you know, for example, this, okay, you will do this. This is my technique with two below. It's this below, right? And then they broke this. Two below, I short here. And I make about 3.8 pip. And I get out in here, which is that loss about 1.2 pip, and then I'm buying this here and only make a 3 pip, and then I get out here. I'm losing my ass out again. Excuse my language. My my position out. So this one is 5 pip. Remember that is 500 there, 100, $600. But then I short in here. And then I carry losses here, and then finally I can hold it until the target, which is the which is 18. So it's 1800. So I lose 600 and then make 1800, a total of what? $1,200 is the target. So if you do that backtesting wise, you know, that is my simplest way of strategy applying this methodology. Remember the blue line here again is reflecting of my own way of trading, meaning I'm trading for 4 hours in front of the screen manually. And the red 160 here is how long I hold my position. So it's different in the meaning that try to fit the moving averages to do all this kind of thing. But I have to adapt the rules. So if it's and this one is moving averages in terms of if it's below is a downtrend. You remember 1440, right? Is a total of minutes of the day of 122 pips. So if they're below it, I short. Above it, I buy. That's how simple it is. Okay. Uh, any strategy can be as long as you know J trader number one is the limit is and then sometimes it in some time to time, right, when it's fear and then it hit those call it this is what happened if you looking at so many analysis, people will draw H4 for what they want to conclude their point of view idea. A lot of people, that's the way they do that. But at the same time, they trading on the intraday, so they accumulate a certain price become a support and resistance because of the opinion. The natural face about that fact is actually, not exactly work for these people. But it's, most of the time also a 50-50 kind of chance. Um, but that is kind of the idea of why it's very seldom that you can see someone can use a minute charts and then can be successful. Even they use 3 seconds to be faster than anyone, or 10 seconds, so they can see the pattern where it's supposed to go. And some of them using the combining. It's very convoluted because they don't see. Most of these traders do not see, but it create the this is what we call it the natural path itself from the confusion, the chaotic kind of idea, a mix of idea. They are creating a limitation on each of them. They don't realize the amount of the money and then the policy that made by the federal bank to keep the certain pricing and then associated with the fundamental. Basically, it has to be very strongly associated with, and the theory about a certain amount, certain price will actually help them to know to stabilize certain thing, like from inflation to the employment, etc. So what I'm trying to give you right now is out of those chaotic things, it's the simplest way to look at it. Once you know the limit, put the limit on. Now you got the grid, so if you got two below, you probably got the tendency to go down there. Okay, but I remember that when this is 57, we do have a pip stop. They call it a cycle of 7 pips. So that is the idea that 50 is another thing that I'm not really too eager to short below this at the first time they reach this. And then that cycle of 50, and 57 pip, I noticed that it's helped me a lot. And then I even can do contrarian trading. When they break this, I can buy here. And then the target, of course, as me, the way I think, or the way set up here, is my blue line, most likely, if I'm a contrarian trading. Like the way, remember when I show you the buy, and then it's coming down, and I get off at the blue line. That is for me. It's not it doesn't mean that you will follow me that way. If you don't feel like this, for example, I give you, oh, my time is up. Okay, and 3 minutes actually. So if I buy here on the top here, right, well, for whatever reason, I like to click, seems like it can going up, spur of the moment. Well, I never do that because, it's not too above this. But let's say I do that. Where will be my get off for this? It's this, blue, or like, when I sit down in front of this. If I'm a buyer, I would like to see my price above this. That's more likely. What about this one too far out here? Okay, if I do the contrarian trading, catching the knife, not exactly catching, I actually go to above this where the limit, the base is. My target will be that. So what will be my stop? My stop is I can use for the one that I started with, just two below here. Or I increase the trailing stop. That's what I use, mostly trailing stop. So you can see that sometimes if I buy, I can king by itself. And this is one of the example that I did. If you see in the bottom there, there's a red, the SL. It's a trailing stop. It's a buy, and then it goes whatever it is, and then it get off. As link, it's a 2-day kind of result for that. So in a way, is that, and I'm glad that you guys actually come to my webinar today. It's a very short one, but I'm going to get a longer one on Thursday and Friday. I thank you for that, Gita, and have a pleasant and profitable trading. Bye now. Bye bye, Gita.